Hey guys, this is Rudy for Best Your Investor. I'm going to do something a little different here. A couple of people in the last few videos that I made, specifically the one on Petrobras, asked me whether I had looked at certain energy companies that I actually have not looked at specifically or at all. And I thought, hey, you know what? There are some really interesting companies here that I've been pretty much ignoring. So I thought, why don't we take a look at some of these? A couple of them are in the emerging market economies. And so I just quickly looked and found a snapshot here of the GDP in billions of emerging markets. It's very, very interesting, just observationally. So just as a sort of method to set the table here, India, 7.5 billion, and then China, 6.3. I would have imagined that'd be the other way around. The Philippines, look at that one, 6.6 billion GDP. That's quite phenomenal. Egypt, 5.1. So there are a number of countries right now that are actually growing quite exponentially and doing very, very well in the sort of so-called emerging market economies. But what I want to do in this video, as I said, is a little different. So the Rusty LM, and by the way, thank you for all the comments and input and questions and all that kind of stuff, because obviously I do this because I enjoy it. But Rusty, I'll say the Rusty LM, asked, any thoughts on YPF and RIG? Now, RIG comes up quite frequently, at least once a month or so, sometimes 2 or 3 times a month. People say, hey, what do you think about RIG? So I'm going to talk about that one in just a little bit. RIG is Transocean. And then YPF is a company that I am not familiar with at all. So we're going to not do a deep dive, but I'm going to kind of do a 50,000 foot flyover and just take a look at some of these. Ecopetrol, I've looked at before. This is a Colombian company. The ticker symbol is EC. So, I've got 3 companies here I hardly ever cover: YPF, RIG, EC. And then Rusty also added another one, EQNR. So, effectively, what the Rusty LM challenged me to do was look at 2 companies that I have never looked at before, which is YPF and EQNR. Added RIG just for good measure. And then Ed Gonzalez added Ecopetrol. And then I thought, you know what? The best way for me to compare 5 stocks is to compare 5 stocks and not 4. There are 4 on the screen. So what I did is I went to bar charts and I just added Petrobras. Now, the first thing that you want to note here is Petrobras, of course, in an emerging market as well, which is Brazil. And Petrobras right now, subject to the volatility as a result of the presidential elections that just concluded with a runoff with President Lula, now the president of Brazil. Now, Ecopetrol, like a couple of these, are for US tax persons, ADRs, and ADR is American Depository Receipt. So you're not buying units of stock, you're actually buying a note, which is an ADR. And then right at the bottom of the screen here, you can kind of see that Ecopetrol, Colombia, and Petrobras in Brazil are similar because they're emerging markets integrated companies. Then the other 3 in the middle, we have oil, international integrated, oil and gas drilling, which is Transocean, and oil refining and marketing, Equinor. So to be fair, it's not really reasonable to kind of slap them all onto one page and just compare them as if they were equals, because they are not necessarily equal companies. However, they're in the same industry, and my objective is not really to start splitting hairs in terms of what exactly their business is, but rather trying to determine whether any of these are potential buys for us to invest in. So for the technical guys, as I've done a few times before, the stochastic is an indicator, and there are many ways to interpret it. So just to refresh your memory, the stochastic indicators show you that you can propose to buy when it's below 20 to 30% and sell when it's above 70 to 80%. That's a little bit vague. If I cut that down or slice it into a more simplistic sentence, I can say anytime the stochastic or the raw stochastic 20-day score is above 80, the stock is very much overbought, and you probably don't want to open a new position in the stock at that point in time. If you already have a position that's different, you can just hold it, but you don't want to buy when the stochastic is above 80. So based on that technical information alone, so this is just one particular benchmark or metric, YPF, RIG, and Equinor effectively are eliminated as potential buys. Ecopetrol is kind of somewhere in the middle, sort of between that 30 and 70. But look at Petrobras, it's only at 8. So in the same manner, I say if it's above 80%, it's overbought. Then if it's below 20%, it's oversold. So people quite rightfully ran away from Petrobras because of all the volatility and the uncertainty related to the Brazilian elections and all that kind of stuff. I am not proposing that now is a good time to jump in, but you know what? High risk, high reward. But be prepared to watch this thing go up and down and be volatile, and you might take a bit of a hit on paper because obviously you only lose money if you actually sell the stock at a loss. But you might take a hit on paper before it recovers again. So high risk for sure, high reward never for sure, right? We don't know. Weighted alpha, again, just to refresh your memory, it indicates how much a stock has risen or fallen over the past 250 trading periods. This is a bar chart specific criteria, 250 trading periods. It allows you to quickly spot stocks that have rallied strongly over the past 12 months and may continue to rally. So based on that score, the weighted alpha, you can say like, wow, YPF has done really well over the past 250 trading periods, and maybe this rally is going to continue, or maybe it is not. On the other hand, you could say we have a weighted alpha here on Ecopetrol from Colombia at negative 37. So maybe this is the turnaround and it's low, right? You cannot rely on just two technical indicators to make a decision as to whether you should buy or sell. So you need to look at it sort of as a motherhood statement in terms of saying, this is of interest to me, and now I need to do a bit of a deeper dive. How about performance? So YPF has been phenomenal. So up over the last 6 months, almost 100%. And Ecopetrol, on the other hand, is down 40%. So do you want to buy the stock that's already up 100, hoping it goes up another 100? Or do you want to buy the stock that's down 40%, hoping it recovers? Right? Tough decisions. We'll get into some more meat on the bone in just a second. So this number that I've added here is basically a ratio between the company's market cap. So in this case, Ecopetrol has a market cap of 21 billion, but look at its annual sales, 120 billion. So the ratio between the market cap and the sales is 6 times greater than the market cap. So that tells you, in addition to all the other things we just looked at a minute ago, this company is grossly undervalued. But Colombia, much like Brazil, also has some political turmoil and things like that that you have to be aware of. So you need to do a little bit of homework and always do your due diligence before you invest in any stock. Similarly, on YPF, we have a 1-to-4 ratio. We have a company with a market cap of 3 billion, so much smaller than, for instance, Ecopetrol or Petrobras, but it has annual sales of over 13 billion. So once again, you have a company where the annual sales far exceeds the market cap or the current valuation of the company. So there's a little bit of, something's just not right? And sometimes something is just not right because the market is just valuing the company wrongly. And sometimes things are just not right because there's actually something wrong. So these are the types of things you want to ask yourself and make sure you understand. Transocean, 1-to-1, $2.5 billion market cap, $2.5 billion revenue. Equinor, similar, 1-to-1 approximately, $120 billion market cap, $90 billion in sales. Petrobras, 1-to-1, 84. So these three are kind of similar. The market cap is actually a reflection of annual sales. If you want to use that as a benchmark or criteria, then you could say YPF and Ecopetrol are grossly undervalued based on market cap to sales, or price to book or something like that, depending on what you're looking at, right? We can always look at the PE. In fact, we should always look at the PE, and the price earnings ratio is very frequently for me a starting point, right? I want to be at 15 or below if I'm going to initiate a new position. 15, because 15 is the average or the median for the S&P 500 as an index. So if I have a price earnings ratio of under 15, as a general rule, based on the PE alone, it's a potential buy, right? So none of these are factors in isolation. They always work together. You have to look at everything and then decide, is this an investment for me or not? But look at the PEs. They're all pretty good, right? So Ecopetrol is 7, YPF's only at 2, Equinor is only at 5.5, and Petrobras is at 3.3. So they're all cheap. But much like the comment I made a minute ago, sometimes they're cheap for the right reasons, sometimes they're cheap for the wrong reasons. You got to do a little bit of due diligence to make sure you understand exactly why. How about over the past year? So 1 year, if you were invested in YPF or EQNR or PBR, you've done pretty good, and you're probably very, very happy, right? So YPF almost doubled your money for you just over the last 1 year. It's pretty good, right? If you were in rig or the others, whatever, maybe you're not so happy right now. So what I'm going to do here is I'm not going to dive deep. I'm not going to go into the fundamentals, and I'm not even going to go into the proper valuation. I've just taken a snapshot of each of these, and let's see where we go and see how they compare. Ecopetrol is headquartered in Colombia. You can buy it for about $10. It's a $20 billion company. It's got a PE ratio of less than 4, and it pays a huge dividend. I'm not sure if the dividend is sustainable or not because I haven't done that homework. $2.26 at the current stock price yields over 22%. Nice, huh? And it's sitting right here on the left side of its 52-week range, which was effectively $8.60 to $20. You can buy Ecopetrol at $10 and either watch it go back down to $5 or otherwise watch it double to 20. Because remember, we cannot predict where the stock price is going to go. If you look at the performance of Ecopetrol against the indices, it underperformed the Dow Jones, the stodgy old Dow Jones, and the S&P 500 quite significantly. So if you've been long Ecopetrol for the last year or so, you're probably not a happy camper. How about YPF? The opposite is true. If you've been long YPF for the past year, you've doubled your money. So, that's how these things work, right? So you have Ecopetrol in Colombia, and YPF is headquartered in Argentina. On one, you lost half your money, and on the other one, you doubled your money. Strange markets, eh? That's how things work. So YPF in Argentina, you can buy for about $8. Unlike Ecopetrol, which is trading at its 52-week low, YPF is trading at a 52-week high. It's a much smaller company. It's only got a market cap of $3 billion. Ecopetrol was 20. It's got a PE ratio of 3. It doesn't pay a dividend. So if you're buying this, you're buying it as a growth stock, and you're buying it at $8, hoping it goes to 16 or beyond. Can it double from here? I don't know. If any of you are long in YPF, you can maybe tell us why. Share your investment thesis with us and educate us as we go along. Transocean, man, this thing comes up all the time, right? So this is headquartered in Switzerland. But look at this today, up 15%. What happened today? Well, they reported earnings today, and they were pretty good. So now you can buy Transocean at $4. And where is $4? Kind of just sitting right of center on its 52-week range, which was $2.30 to $5.56. Where is it going from here? Well, interestingly enough, even though it went up 15% today, after hours, it pulled back 2% already. So I'm not going to suggest based on that tomorrow it's going to go down again. It might go up. Who knows? Because like JP Morgan once said, if the market doesn't go up, it will go down. So nobody knows, right? Nobody can predict this kind of stuff. But at $4, Transocean is probably not a bad buy. It doesn't have a PE ratio for us to look at. It's not a big company like Ecopetrol or Petrobras. Similar to YPF, it's a $3 billion company. But look here at the bottom. This is a warning sign, if anything, right? So the shorts might have felt a little bit of a squeeze today because the stock bounced 15%. But look at the percentage of shorts down here in the bottom, in the middle of the screen. When you have almost 20% of the entire float that's outstanding being shorted, that means there's a lot of people who believe this thing is going to tank and take a dive and go down even more. So watch out for that. You can always look at the short interest to give an indication as to the market's feeling or sentiment about a particular stock. Over the last short period, it's outperformed the indices. It had a few spikes here, but as a general rule, it's not been the greatest performer. It hasn't done very well. But right now, $4, maybe it's a buy. Well, let me put it this way. I'll buy it with your money. How about Equinor? So Equinor is a company that's based in Norway, and this is by no means an emerging market or small cap company. This company is massive. You can buy the stock for $37. It has a market cap of 116, almost $117 billion. It's just sitting to the left of its 52-week high, which was $42. So if you bought it at 37, it could probably run about $5 before it hits that 52-week high again. It pays a huge dividend, $1.68, which at the current price of $37.20 is yielding 4.5%. And if you were in Equinor, you are probably a happy camper too, because this has treated you really well, and you are up way, way, way above the indices. So the Dow and the S&P 500 are negative. Equinor up almost 40% over the last year. So not too bad. If you are invested in Equinor and you're long Equinor, congratulations. That was certainly a good bet and a company that I glossed over and paid no attention to prior to being asked the question by Rusty. About Petrobras. Now, of course, most of you know that I'm long in Petrobras. My cost basis is around $8.40. I have quite a large position in Petrobras. It's not my largest by far. My largest energy positions are not particularly or specifically in this order: Occidental Petroleum, Energy Transfer, Enbridge, Pembina Pipelines, and XLE. XLE is the index, which is made up by Chevron and Exxon, about 40% in total, 20% each. And then another few high-profile good companies like Conoco and Devon and things like that are about 4.5%, 5%. And there's like 5 of those, right? So if you add all that up, 60-70% of XLE is just like blue chip major high-performing energy companies out of the US. So I'm very comfortable with parking money in XLE until I find another Occidental Petroleum. Petrobras, headquartered in Brazil. You can buy it for about $13. This one's the absolute definition of high risk, high reward, except the high risk is guaranteed, the high reward is not guaranteed. I think Petrobras has some room to run on the upside. I think you can see Petrobras maybe stabilize sort of between $14 and $16 or so. So if your cost basis is below 13, you'd probably be happy with that. But the primary reason why you'd be happy with that is because it's still paying this massive dividend, right? So currently it's paying a dividend of $6.30, which is almost 50%. So $6.30 is almost half of 13, right? So it's rendering a dividend on an annual basis of almost 50%. Is that sustainable? Well, it's not sustainable at 50%, and you can bet your bottom dollar that the new Lula government is going to put some pressure on Petrobras to maybe cut that dividend and return some money to the people as opposed to the shareholders. But we'll have to wait and see. So there's high risk here. This is a super major. It's the cheapest super major in the market right now. The market cap of 85 billion. That's easily, handsomely outperformed the indices. Currently, from a pricing point of view, it's sitting in the middle of that 52-week range. I feel, and this is my feeling is completely irrelevant in terms of where the market goes, but I think Petrobras is more likely to go, for example, to 16 than to 10. If it dipped below 10, I might add to my position. At the current position, the holdings that I have and my current cost basis, I'm comfortable just holding Petrobras. So, doing nothing is also an option, right? So there's my my warning signal for you. I mean, these are 4 stocks I have not covered before and one that I've covered several times, Petrobras. The other 4 are interesting to me. If you are invested in any of them, maybe you can share with us what that thesis is, what it looks like, and where you're at right now. Are you buying, selling, or holding? What do you want to do? The main thing I want to share with you in this video, though, is that you must do your own due diligence. Make sure that if it's interesting for you, watch videos like this where I kind of break it down for you. If we need to do a deeper dive on any one of these equities, if they're of interest to the community, I will do so. I enjoy doing this. I enjoy sharing what little knowledge I have with you guys, and I appreciate the fact that you watch and support the channel. So on that note, this is really saying thanks for watching. Talk to you soon. Take care. Bye-bye.